Welcome back to Investing with Mackie. In this series, I'm conducting a challenge to grow a small account of $50 by 10% per month using the ThetaGang strategy of vertical credit spreads. As I make trades, I will post shorts near real time and follow up with a deep dive like this to fully discuss why I made the trade. Today I made the first trade for the challenge, opening a credit spread for Palantir. Why Palantir? Well, let's look at some of the factors I considered when choosing a stock. First, and very important for this challenge, was I needed to start with a low price stock. The reason is that low price stocks have smaller spreads between strike prices. When you trade a credit spread, you essentially need to have the width of the spread in cash as collateral. With only $50, I could not trade a dollar spread at a low enough risk. Next, I wanted to find a popular stock. The reason here is twofold. One is a popular stock will tend to have good volume, which will help improve liquidity and ultimately reduce the bid-ask spread. When using a multi-leg strategy, you can easily lose money on the bid-ask spread for each contract traded. Because this uses two legs, and unless I hold until expiration, I will have to buy them and then sell them, and a 1 cent bid-ask spread, which is pretty normal, has me already losing nearly $4 to open and close the position. The second reason, and listed as a separate bullet here, is why I want a popular stock, is that they tend to have weekly instead of just monthly options. Weekly options provide more expirations in order to better hit a target delta or theta. This also makes it easier to open, close, and roll positions as needed. Finally, I want to avoid stocks with earnings inside my target expiration. This is key as earnings can cause large price movements. My goal is steady gains with theta, and earnings outside of trading hours could destroy my account when I can't even exit the position. To start my search, I knew Robinhood has a trending list for the most popular stocks. When I went to search, however, I noticed they had a screener tool. That, lo and behold, had a pre-made highest options volume list. From there, I looked at filters and found I could further narrow them down by price. As I went through the list, I selected a couple that I've heard of and added them to a watch list to easily find on my homepage. Here we can see I added Ford, AMC, SoFi, American Airlines, and Palantir. With my established list, I started to look at each of their historical price movements and what options were available. Then I remembered my fourth rule about earnings and that it happens to be earnings season. So I looked at each stock. While IMC has a further out earnings with a 50-cent strike spread and its super low price, it made me rule it out. Also, I didn't want to get screwed by the mother of all squeezes. So based on my list, I started comparing options for Palantir. Usually, I like to look about 2 weeks out when trading credit spreads, because this is where the theta starts to increase the fastest. You can see the slope of the line left of January 26th is much steeper than the slope of the lines right of January 26th. Looking at the price chart, we can see that if we sold the 17 strike and bought the 17.5 strike, we could get a pretty juicy credit of 13 cents per share or $13 credit for the contract. However, it was just over $17 last week, and the delta is around 0.37, which is a little high for me. I like to trade 0.2 to 0.3 deltas. However, the next spread between 17.5 and 18 was only giving a 17 cent per share credit. And remember that I'm likely to lose 2 to 4 cents due to the bid-ask spread. So we pushed back the expiration to look at February 2nd. While not perfect, these give me a decent credit and a stomachable risk. The $17.5 to $18 spread, when I pulled this data for my video, is giving an 11 cent or $11 credit for the contract, and has a delta of only 0.31. While when I entered the position, I only got a credit of 9 cents, at 17 days per expiration, or nearly half a month, if I repeated this, I'd be able to make nearly $18 a month on my $50, or close to 36% per month. If I can keep this up, I can start trading dollar spreads on something like SPY in a month, which is where I'd like to be. Links to this chart are in the description below. If you found this interesting and don't want to miss an update, consider subscribing. Share your comments or questions below. Happy trading!